Welcome back. You're joining us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. We've kick-started a brand new week and looks like it's going to be a green one at that. Chandan Taparia, who's the derivative and technical analyst at Motilal Oswal Financial Services, joins us now to give us a view on how things could shape up from here. Chandan, good morning and thanks for joining in. Your thoughts on whether the Nifty has more legs to go on the upside. The SGX is up almost 30 points. Once we do get that gap up opening, do you see us build on to the gains? And what are the stocks to look at today?
Good morning, Sonia. Have a great start of new week and new financial year. Talking about the market, it has done all the good thing in last two trading session, led by its expiry and the beginning of the new series. So we have seen change in the data setup. The market, which was forming the lower top, has surpassed the immediate hurdle of 17,200. The good part is that earlier it was moving in between 16,800 to 17,200, and after the recent breakout, the bottom out process will shift the higher range in the market. So we believe that with support of 17,171, 17,200, this leg has more scope towards 17,777 marks. So you can understand further 300 to 400 points upswing could be there. But buy on decline stance has to be utilized to deal this market sentiment. The good part is that your India VIX has been falling down, that is near and below 13 level. Dow is holding about 32,500. And CBOE VIX also corrected and now near to 19 level. So decline in the volatility in the US and the Indian market and hold the equity indices with jump in the PCR, indicating the positive to range bound bias in the Indian market. Talking about Bank Nifty, that also given a breakout of the immediate consolidation, and with support of 40,250, we have more leg towards 41,250 marks. Now looking at the stock specific, we have positive view on the banking counter and selective bank stock could see some short covering activity, including the Bank Nifty index as well. So first it is buy on ICICI Bank. It has given a consolidation breakout of last 54 trading session with decisive hold of 870 level. 96% rollover as seen from the previous to current series, and now short covering seen in last two trading session. So recommending to buy with a stop loss of 863. The stock has potential to move towards 920 level. Second trading idea, that is buy on trend. It has given a breakout from its pole and flag pattern, which has bullish implication. The stock has been consolidating from last 34 days. So this consolidation breakout with 95% rollover, adding some built up of long position. So expecting further up move, can buy with stop loss of 1350, and trend has potential to rally to us 1444 level. Last trading idea, that is from pharma, that is Dr. Reddy. After a long time now, we are selecting pharma counter given their price structure. So Dr. Reddy is one of the strongest setup, giving the breakout on the weekly and the monthly time frame. Option activity is also seen with put writing and call unwinding, which might see some more uptick from current level. So Dr. Reddy one can buy with support of 4570. The stock can head to us 4740 levels.
Chandan, just a quick, very brief answer on check on Reliance, which moved up almost about 4.5-5% on Friday. How are the setups looking? Good for more?
Yeah, Prashant, thanks. Prashant, the good part is Reliance exactly taken the key support of 2180. And earlier in monthly chart, 2180 used to be hurdle. And this time exactly 2180 has taken as a support. And in lower time frame, it formed the double bottom with bullish divergence on the mechanical indicator. In weekly chart, it is negating lower top, lower bottom with some bullish harmonic pattern and surpassing this 50-day. So now the Reliance will take the lead with support near to 2280. We have potential to move towards 2400 to 2450 in the Reliance.
All right. Well, thanks a lot for that. So you know what? Let's just talk about some of the numbers that have come through as well. Maruti Suzuki, the March sales were quite flat actually on a year-on-year basis at 170,000 units. But what's important is that on a month-on-month basis, the sales declined just 1%, despite the production constraint warning that the company had given last month due to chip shortage impact. So it's the first corporate we're speaking to today after the sales came in better than what the street was estimating. The auto major also managed to record its highest ever annual sales in FY23. Shashank Srivastava, who's a senior executive officer marketing and sales at Maruti, joins us now. Mr. Srivastava, congrats on record sales in FY23. You've seen a growth of 20% in the domestic market in FY23 overall. I know you've spoken about a slowdown in demand, but is it a possibility that you will be able to replicate this growth in FY24?
I think the growth of 20% plus in next year may not be likely. It's unlikely that we are going to see this type of growth. Of course, you must remember that the 21% or so that the growth we saw this year, this was despite the semiconductor issues, which had led to a drop in production levels, especially in some particular models where we still see a lot of waiting. So it really depends on the production, and that is dependent on the semiconductor supply. But I think taking in balance, I think replicating 21% may be difficult for next year.
No, Mr. Srivastava, yes, you said that industry will grow only between 5 and 7% in FY24. In March, we've seen flat growth in wholesale numbers. Could you tell us what has been the performance on the retail side?
Retail numbers for the month of March have been roughly at the same level as last year, including the wholesale passenger vehicle industry. So, but of course, cumulatively, there is a growth 21% in wholesale and also about 19% in retail for Maruti Suzuki. That's for the whole period, April to March. March, of course, a little bit affected because of both on the supply side, as also because there was this inauspicious period just up to 10th of March, just before Holi, and that would have affected the retails also a little bit. But overall in the industry, despite the fact that we compare with last March, overall industry retails have been about 350,000, which is the highest March number ever. As also the wholesale, which is about 336,000 for the industry, which is also the highest ever March that we have seen in the industry. Although, as you just rightly pointed out, the growth both in wholesale and retail when compared with last year is just around the 3.7 to 4%.
All right, so, there are some red flags in the auto sector. If I talk about impending the monsoon weakness, inflation impact, slowdown of consumption, do you see that contribute to incremental auto slowdown?
There are some looming red flags which we are now increasingly monitoring because we believe they could have a negative impact on the overall demand next year. That includes first and foremost the overall economy growth itself. The auto industry growth is very, very highly correlated with the per capita GDP growth. In fact, the correlation factor is as high as 0.98, which is a very high level of correlation. Therefore, a lot depends on how the economy grows. We have factored in about 6.5% growth, 6.4 to 6.5% growth for the overall economy. But there are some noises coming in that it could be between 6 to 6.5 with a negative bias. So that is one red flag, obviously the biggest red flag. The other thing is the increase in the repo rates, which then translate into the transmission into the auto loan, retail loan rates. The auto retails in our country, 80% is through financing. And therefore, changes in the interest rate for auto loans can have a negative impact. We have seen since May of last year when the central bank started tightening the rates from about 4% to the current 6.5%, a 250 basis point increase. And that has more or less started now completely getting passed through into the auto retail loan rates.
Okay, that's on the domestic side. Got that. What about exports? What growth are you projecting for exports this time around? You have a large exposure to a lot of markets, Africa, Latin America. Those are markets that have been, a bit volatile. How have those markets performed in March, and what's the expectation?
Our growth in export this year was from 2.38 lakhs in 21-22 to almost 2.6 lakh, 2.59 something lakhs in this year. And going forward, we are projecting a small growth there as well. And we do not have a very large exports to such countries as Europe, where obviously there has been quite a negative effect as far as the overall economy projections are concerned. But our exports for Latin America, Middle East and Africa have been steady and strong, especially, for example, in Africa, for South Africa, Ivory Coast, Ethiopia, and these areas that have seen pretty strong demand. I think partly to do with the fact that post-COVID, we have seen the personal mobility people trending towards personal mobility rather than shared mobility. And that the demand has translated into a demand for the cost-effective vehicles. And there, I think our models have performed really well, both in Latin America as well as the African countries.
Mr. Srivastava, I just want to look at the pre-open rates as well, which are starting to come through. If you can quickly do that, it's a much better screen as compared to what the SGX was indicating. I think we've got 85 points on the Nifty, and I think almost a 200-point move on the Sensex. 73, that's about a 0.4% pop. 17,435 is what the pre-open is indicative of. The Sensex will come up on the screen as well, and we'll look at the stocks in a bit from now. So the gap perhaps is going to be a little better. And why not, given the fact, of course, that the handoff from US on Friday was pretty solid. Now, back to Maruti. Mr. Srivastava, let's talk about your market share. That was 42% as of FY22. Where are you in the journey of getting to that 50% mark that you had actually guided for? And specifically, how much was the SUV market share for you at the end of the month of March?
Our market share for 22-23 is just above 42%. And in the non-SUV market, of course, our market share continues to go up beyond 65%, in fact. And as I mentioned earlier, our objective is to get to that 50% market share. But that may be over the medium term. And immediately next year, we do see an improvement in our market share thanks to the SUV vehicles that we have introduced, and the sales of which both the Fronx and the Jimny will start in April end, or for the Fronx and for the Jimny a little later. So, and the full year effect of the Grand Vitara, which is our mid SUV. So the combined effect of that should increase our SUV market share. Last year, our SUV market share was just about 11.5%. But in the Q4 of this year, when we have seen the good availability of Brezza and the Vitara, it's already about 18%. And going forward next year, I think we can go up to 25% market share in SUV. And if that happens, obviously our market, and we continue to maintain that 65% in the non-SUV sector, I think we are going to see a good increase in our market share next year.
All right, Mr. Srivastava. Well, moving SUV market share to around 25%, that's something that the street will like. We'll track that, as well as your non-SUV market share at around that 65%. Always good hearing your thoughts. Thanks so much for speaking to us here at CNBC-TV18. Well, Prakash Diwan is still standing by. Prakash, what do you make of the Maruti stock? You heard what the management had to say.
I think it's quite promising, though it doesn't seem optically at a point where things are looking very exciting. And this tepid anticipation of tepid growth for FY24 is valid, given that there's nothing very significant you can ride on right now. But I'm very bullish that their entry into the SUV space is going to actually be a very strong, it's of a very strong footing in terms of design and price points and all of that. And there's a huge improvement in market share that you'll probably see once things roll out. The other thing that this chip shortage is, which has impacted PVs, is probably something which could now start tapering off. So that's the other thing which Maruti, given the fact that it has a pure PV portfolio, will benefit out of. So I'm quite positive, and the risk reward at this level is fairly decent. It's not like that you're paying top-notch valuations for Maruti, which actually deserves a premium given its market presence, but it will eventually do that once the momentum builds on the sales side. So yeah, look forward to things falling in place, and the management has always been conservative. So you need to kind of factor that in as well.
Prakash, we'll leave it there. Thank you very much. Good speaking with you as always here on CNBC TV18. Mitesh is with us with his 9:10 call. Mitesh, what do you have?
Prashant, I'll go with the buy on Bajaj Finserv. Keep the stop below 1250, and 13.10-15 should be the near-term target.
All right, thanks a lot for that. Well, the pre-opening rates have settled a tad bit higher, actually. 70 points higher. And Maruti is one of your big movers in pre-opening. That's because the management said that the SUV market share is currently just about 11%, and they are confident of improving their SUV market share to 25% in FY24. So the street definitely like that. But Nimesh is here to give us a standout brokerage report of the day. Nimesh, what do you have?
Hi, sorry. So today's standout is on KPIT Technologies, the stock which has been in the momentum. The stock is up, 30% Y2D and at a 52-week high. But JP Morgan has initiated coverage with an underweight rating and a target price of 520, a 44% potential downside from current levels. So it's not going to be a good news as far as the KPIT bulls are concerned. Now, the key, derating triggers are one, the slowing growth beyond FY24 of more than 20%. So that's going to be a big challenge for KPIT Technologies, and the scarcity premium is going to go away with the competitor Tata Technologies IPO coming this year. So that's the first reason. Second, JP Morgan believes that KPIT need to grow beyond. They need to get large order wins to grow beyond 20%, which is going to be a challenge given it's a cyclical industry. And two, it's going to be too much of optimistic for such a benefit for KPIT Technologies, given the valuations are at 50 times. So on back of all this, underweight rating. While they like companies' growth focus on auto vertical, but they will wait for good entry points. So at these levels, they have an underweight rating on KPIT Technologies and a target price of 520, a potential 44% downside from current levels.
Okay, all right, Nimesh, thanks a lot for that. Let's see how that stock reacts. It's been a big outperformer, but clearly JP Morgan's looking fairly cautious on that underweight rating, 520 rupees. Well, Surabhi is standing by to run us through a stock that she believes has been moving with a lot of momentum. Hi, Surabhi. Morning.
Morning, Nigel. The one that I have my eye on is actually Jain Irrigation. We're noticing the stock for the past couple of weeks. Actually, last week itself, on Wednesday, it had a huge pop. That was on news. Wednesday, the stock was up almost 12%. Friday, there was follow-on momentum with a gain of almost 5%. And in the last 1 month, if you look at sort of just the last 20-25 odd trading sessions, we're talking about a gain of about 20 to 21%. The volumes have been steadily higher as well. Volumes on Wednesday were about 60 lakh shares. Volumes on Friday were pretty huge, about 96.5 lakh shares. The average 10-day is closer to about 49 lakh shares. So the volumes have been on the higher side. The stock managed to cross its 200 DMA at nearly 34. So that was another positive price action indicator. The delivery quantity has been very patchy, and that's the one thing that doesn't kind of entirely add up. On Wednesday, it was 57%. Friday, it fell to about 40%. The average has been 50 to 51% over the last 10 odd sessions, if you take a look. The company, of course, announced a merger of its global business with Temasek-owned Rivulis, which will reduce the consolidated net debt by 44%.
All right, thanks a lot for that. By the way, SpiceJet has now completed hiving off Spice Express, and there is an update that the management has put on the exchanges as to what the impact of, hiving off of Spice Express would mean for the stock. By the way, the other stocks in focus because of the big spike up in crude, right? So you have, of course, a rising crude is negative for a lot of companies, positive for some as well. So let's get some of those stocks on board. Rising crude, negative for paint companies. So you have Asian Paints, Berger Paints that could be in the red. Negative for aviation companies, Interglobe Aviation. Asian Paints, Berger Paints already indicating a soft start. Rising crude is negative for tire companies as well. Apollo Tyres, MRF all use crude in manufacturing of tires. And it's positive, though, for ONGC and Oil India. So these are just a couple of stocks that we're going to keep on our radar. We have 20 seconds to go before the market opens for the day. It's the first day of the trading week, a truncated week at that. Looks like it's going to be a solid opening, given the kind of move that we saw last week, where the Nifty managed to gain and claw back above that 17,400 mark. Looks like there's some follow-on buying this morning as well. There you have it. 55 points in the green for the Nifty. The Sensex up 165 odd points, led largely by auto stocks. Interesting there. Eicher Motors, Hero MotoCorp, Maruti Suzuki are your top Nifty gainers right now. Post the numbers that came through. As we were telling you, both for Hero and Maruti, there's a good recovery this time around that we've seen. Eicher as well, both, Royal Enfield as well as Volvo Eicher commercial vehicle sales were not bad. So looking pretty good there. Apart from that, you have Bajaj Finserv, Wipro, Power Grid, Bharti Airtel, Reliance Industries that's up. I was mentioning how rising crude is positive for ONGC. So both ONGC and Oil India are in the green right now. ONGC is in fact your top Nifty gainer, up 2.5%. So it's a motley bunch of stocks based on news flow. Rising crude resulting in ONGC Oil India in the green. Good auto sales, Eicher Motors, Maruti, Hero MotoCorp doing well. Ultratech Cement, Nigel was telling us about that earlier, so that's in the green as well. And on the downside, you have Asian Paints and BPCL. So, of course, expectedly, Asian Paints could be under pressure because of rising crude prices. Adani Group stocks, again, taking it on the chin. Adani Enterprises down about 1%. Tech Mahindra, ITC, Cipla, Infosys. Interesting, IT stocks going into their earnings a tad bit soft. Maybe there's an expectation, there is in fact an expectation of weakness in earnings. Very slow, barely 1% constant currency revenue growth is what Jefferies is estimating for its coverage universe in IT. And Infosys is down about 0.2%. It could be giving an FY24 outlook as well. So keep an eye out on that. But otherwise, the start was good. But now the market is sort of cooling its heels a bit.
Well, that's right, Sonia. But a couple of stocks are doing very, very well. SML Isuzu, a smaller company, they came out with their quarterly update and it looked quite good. So the total sales were up at close to around 60%. The cargo volumes continue to struggle, but the passenger vehicles more than made up for it. So that stock is up close to around 8.5%. Remember, they took a price increase as well in the past week. VST Tillers, the tiller segment suddenly looks good. The tractor segment still is not firing. But the tiller segment, we'll need to find out whether or not there was a one-time impact that came out there because it clocked more than 5,000 units in a single month itself. So VST Tillers is the other one that's up and about. A couple of other notable names, CSB Bank. Well, the operational update that came out there looked very, very good. Good growth is what we're seeing in terms of the dispatches. The CASA as well was maintained out there. Abhishek told us those numbers were good. The stock opens up with a gain of around 3%. Karnataka Bank, well, surprisingly, the loan book shrunk on a quarter-on-quarter basis. So that's, I think, doing a relative underperformance, though it was more or less flattish. No, now, in fact, it's down close to around 4.5%. So clearly, the street hasn't taken that lightly. When you're seeing credit growth and when you're reporting a degrowth on a sequential basis, we'll require more clarity on that front. PNC Infra, well, they won a whole host of orders from the NHAI, and that's why that stock is up close to around 2.5% the last time I checked. 3 projects, it's up nearly around 3% as we speak. And keep an eye out on a couple of these defense names, BEL, HAL, GRSC, as well as BHAL, all of them clocking in some order wins. Some of them have already seen a big run, so keep an eye out on them. But a decent opening, 30 points up and down, well, you'll take it, right?
It's quiet, right, Nigel? But it's up 30 as well on the Nifty. Another space is the city gas distribution companies, right? Because there was widespread expectation that those Kirit Parikh committee panel recommendations would be approved. Friday was the last day to do it if they had to come into effect from the 1st of April. It has not happened. And you're seeing a 2% cut on MGL. IGL will come up on your screen. It is down 3%. IGL is actually, actually losses are increasing a little bit more. Maybe we can look at Gujarat Gas as well. Gujarat Gas is down about, Gujarat Gas is absolutely flat. I mean, IGL and MGL are the two stocks which are taking it on the chin at this point in time. Now it's mostly oil and gas, which is, of course, also moving around because of the big jump in oil prices. I think we've laid this out. ONGC is the top of the board right now with a 3.5% gainer. On the other side, you've got BPCL and HPCL. Both are down about 4% or so as well. Oil India, along with ONGC, is the other one, which is up 5%. I have to say, for this time of the day, numerically, advances outnumber declines by a large number, 5:1, and maybe volumes will pick up. Or maybe they'll remain slightly on the lower side because of these intermittent holidays this week. But it's quiet. It's a quiet kind of start. Adani Enterprises starts down 2%. Adani Green is down about 2%. Adani Wilmar is down about 2%. And a few other names here on the losing side as well. Our market master of the day is with us, Nilesh Shah, Managing Director at Kotak Mahindra Asset Management Company. Nilesh, good to have you with us here. Good morning. Great to have you with us on CNBC-TV18. First thoughts, Nilesh, on the markets as they are set up as we start a new financial year, FY24. 23 over 22 in terms of at least index returns was kind of flat, although stocks did see a fair bit of damage. What's your prognosis? Will we improve or will it be a bit of a muddled market for the bulk of this year too?
So it's very difficult to take a one-year call in equity market. But my feel is that next year also we will see a lot of volatility based on events. If those events turn out to be in favor of India, then certainly markets can deliver positive return. Because since almost August 21, markets haven't given any return. But if those events go against India, then markets may deliver negative return. For example, if you had asked me on Friday, I would not have been able to guess that OPEC will cut oil production by more than 1 million barrels and pull up the oil prices. Now, this kind of events will come and derail our equation.
Got that. The narrative. Nilesh, hi, good morning. This is Sonia here. Thanks for joining us. The narrative so far up until now is that you would make better returns in debt this year compared to equities, has shaped up very well. You think the tide is turning, or is that going to be the case as well in asset allocation? Better to allocate, more money to debt versus equity in this calendar year?
So I will certainly say that the certainty of making money in debt is far higher. Interest rates seems to be picking out in global markets as well as India. And we could see rate cut cycle begin towards the end of 23, beginning of 24. So this year, debt return will not only have coupon income, but also capital appreciation thanks to interest rates coming down. Whereas to generate return in equity, one will have to really pick up good stock and pray that events continue to turn in favor of India. But mind you, equity and debt is like so sunar ki ek luhar ki. 1 day's return in equity can overtake 1 year's return in debt in no time.
Yeah. Nilesh, debt has been a touchy topic as well, right? Overall, with all these taxation changes. And I was curious how you are thinking about this in terms of what has happened. That was another bolt out of the blue. No one was expecting it, did not find any mention in the budget. But there it was in amendments to the finance bill. What did you make of it, and what are your thoughts?
So this is step towards new tax regime where there are lower taxes and no concession. This is also step towards creating a level playing field among financial services. And we hope and pray that Finance Ministry takes this journey to the logical conclusion. On your channel, I have been advocating that this arbitrage of converting interest income through listed zero coupon debentures after 1 year and 1 day to long-term capital gain, which creates tax arbitrage of 29% this year and 33% last year, needs to be stopped. There is far more tax leakage in zero coupon listed debenture than what was there in debt mutual fund. Even today, different financial products continue to have different tax benefits. And I hope and pray that this journey of creating level playing field continues going forward.
No, but specifically with regards to what has happened to debt mutual funds, Nilesh, anecdotally, one was hearing that, some of these schemes in the last week of FY23 have seen inflows that they've not seen for a couple of years put together. If you can corroborate that, and what will happen from here out, in your opinion?
So undoubtedly, since this taxation changes were from prospective effect of 1st April, it created a window or a push for investors to take advantage of previous tax regime where debt mutual funds got indexation benefits and long-term capital gains. And many of them took the advantage. Going forward, we still believe debt mutual funds probably does not have tax advantage like before, but it continues to give you diversification for as small a sum as ₹500. It gives you professional management, and most importantly, it gives you anytime liquidity. It's easy to enter into Indian debt market, but it's very, very difficult to exit. So we provide liquidity, diversification, and professional management. And that will continue to keep investors interested in debt mutual fund.
Okay. By the way, I just wanted to mention a couple of stocks to draw attention of our viewers. The Ashok Leyland stock is up well in the green. We were telling you earlier, it's a 19% growth that Ashok Leyland has seen year on year in their numbers for March. And the medium and heavy commercial vehicle space, especially the bus segment, is doing very well since the reopening of schools and offices. The bus segment has gone up 72%, while the total MHCV segment is up 20%. Nilesh, there's a lot happening here, right, in this space. I mean, commercial vehicles has picked up. There is, of course, the price hikes that will kick in because of new emission norms. So there's a lot of pre-buying that's happening in this space. But in general, are you bullish on this theme? And how would you take it forward in the auto space now?
we remain positive on the auto space, mainly first the passenger vehicle, then the commercial vehicle, and then the two-wheeler. In passenger vehicle, clearly there is a K-shaped recovery. There is more buying at the mid to higher end than at the lower end. There is a waiting period. Commodity prices have cooled off, and that has not been passed on to the consumer. So margins will be positively impacted. Finance cost has gone up, but it has not impacted demand significantly. So overall, passenger cars and auto components continue to remain on the positive side. Commercial vehicles are also benefiting from general economic recovery. The emergence of India as China plus one and also becoming part of the global supply chain management will continue to support commercial vehicle recovery. Two-wheelers have seen subdued demand, especially in rural India. Let's hope and pray that it recovers soon. But our preference right now will be auto passenger vehicles, auto components, and commercial vehicle.
All right. Hi, Nilesh. Good morning. Nilesh, if you want to stay protected from what's going on in the globe, maybe cement could be a play, right? And things have been moving well for them. Demand is reasonably strong. You have input costs that have seen a sharp downtick, which will help on the margin. And also, getting into an election year, normally you see good growth. How would you all approach this space?
Undoubtedly, we remain positive on cement. It's one commodity which can't be imported, so it has to be locally manufactured and locally distributed. Second, there is a huge focus on infrastructure build-up. This ahead of election gets a separate push. There is higher allocation in the budget as well as focus on execution. Put together, cement will be beneficiary, and we have seen in the month of Jan-Feb, for which data is available, the cement offtake has been fairly good.
Nilesh, we are on the cusp of another earnings season. What would you like to hear? Because, I remember after the third quarter earnings, your outlook had become a little benign, right? And rightfully so. You were pointing to slight stresses emerging in corporate commentary, even numbers which have been reported on an aggregate basis. Do you expect to see improvement? Because, you and your team are assuming constant conversation with your investee companies, etc. as well. So you have a sense of what's going on. So what are you hoping to hear, and what's likely, in your opinion?
So September and December 22 quarterly results were below expectation for most sectors except some outstanding performance from banking and financial services. We have seen for the month of Jan and Feb some data which is improving. For example, rural consumption, which was subdued till December 22, seems to have picked up and is ahead of urban consumption from a growth point of view. We are also seeing substantial reduction in current account deficit with services exports picking up. Put together, I would like to see in March 23 quarter numbers, or at least expectations for future, a better outlook towards rural consumption and also narrowing down of current account deficit, resulting into either higher services exports or even pick up in manufacturing exports. If the corporate commentary is more positive based on March 23 results or expectations of June 23, that will be music to our ears.
Okay. By the way, the market is not looking good. It's actually given up on a lot of its early morning gains. The Nifty is now down about 17 odd points. The Sensex is down 100 points. So not able to really hold up above that 17,000 mark convincingly, you'd have to say. What's under pressure now is a lot of these stocks, actually. IT is under pressure. Tech Mahindra, Infosys, TCS are all down and out. And BPCL, of course, because of the way crude has moved, is down about 3.5%. Nilesh, I wanted your thoughts on IT because, we're heading into earnings season now, and the hope is that Infosys will give out what could be the first look into FY24 guidance from the tech companies. Are you getting a sense that there could be more caution than positive updates from tech companies this time around? And if yes, how do you approach this space?
So my feeling is that IT is facing lots of headwinds ahead. One, there is worry about global demand. Second, there is worry on a medium to longer term basis about AI and ML disrupting at least some of the work which is done by Indian IT companies. Third, there is also challenges related to leadership transition we have seen in a couple of companies. Put all these things together, people will be looking forward to what is the commentary given by the IT management. Are they confident about growth? Are they seeing traction in overseas client order book? I think my feel is that IT sector is now bottom up. There will be separation of men from the boys. There will be few companies which may be able to withstand the headwinds which are coming up right now, but there will be a lot of disappointment also. So IT, from being a top-down sector, is now clearly bottom-up stock pick. Some will be winners and some may not be.
Nilesh, what about the entire earnings picture? Suddenly, in fact, the street started doubting that. There were some headwinds. Now we're split right down the middle. There have been some scaling back of earnings growth estimates as well. What are y'all penciling in for the next couple of years?
So it's very, very difficult to take a longer term call. And fortunately, unlike sell-side analysts, we have the luxury of not taking a yearly Sensex or Nifty EPS numbers. But clearly, there is a division at the middle. In Jan and Feb, some of the data has started showing that finally the problems which were constraining our economy seems to be behind us. Rural consumption seems to be recovering. Current account deficit has sharply come down thanks to rising service exports. Apart from IT and BPO, non-IT, non-BPO global capability center exports have also started picking up. Even on China plus one, we have started seeing some positive trends, especially in electronic component kind of industry. So overall, there is hope, but at the same time, there is also a fear in the market based on September and December 22 quarterly earnings, where other than BFSI, most companies gave little below expectation results. So either it's the number or it is the commentary. My feeling is that we are likely to see some volatility ahead in terms of earnings. Monsoon will come to know on 15th of April how severe El Nino will be and what will be the impact on Indian economy, especially agriculture and rural. Towards the end of the year, we'll also start factoring in May 24 general election and the outcome. So we are going to see volatile market. But as I mentioned, equities saw sunarki, ek luharki. One day's equity can overtake debt return for a year.
Okay, all right. We hope that day comes soon, right, Nilesh? Everyone's been waiting long. It's been a really frustrating last 6 to 12 months. But as you said, it pays to be patient in this in a market like this. So thanks a lot for joining in, and we will speak to you again very soon. Okay, by the way, those are M&M's numbers that have come through. The tractor sales looking good, actually. Domestic sales up 20% at 33,622 units. So we'll also get the auto numbers. The total sales have gone up 18%. So that's looking good. We'll get to that in greater detail in a bit. We'll also try and perhaps touch base with the management. But in the meantime, all auto stocks are doing well. So whether it's Maruti, Eicher Motors, Hero MotoCorp, all up to 2.5% right now. Maruti telling us that their SUV market share is something that they hope to take up from 11% all the way to 25% next year. And now the stock is also moving up, similar to the market share. But Nigel, you're watching out for cement stocks today.
Well, that's right. Jefferies, they've come out with the note, and we had given the market a bit of a heads up in the past week itself. There's a high probability that there could be a cement price increase that will be pushed about. So Jefferies has given us some takeaways from their interactions with dealers. Couple of points to note out there. The all India prices, we have been mentioning it's been weak. So it was weak for the past month. That's for March 2023. And even on a sequential basis, that's Q4 versus Q3, it's down by close to 100%. Prices, one of the reasons that they have been weak is because volumes have been pushed through. The other factor that they've mentioned is that there are price increases that have been taken about, and they've quantified it. On an average, all India, it could be higher by close to around 5%. That's the attempt to increase prices from April itself. And also they say that in South India, it could be hiked by as much as 50 rupees per bag. Demand as well has been rather strong in multiple markets, and that's perfectly reflected in Ultratech Cement's 15% growth that they've given on a year-on-year basis. On Q4 numbers, they're still working with, in spite of no price increase, they're saying that there'll be a growth in EBITDA per ton because operating leverage will play out and input costs have cooled off. Not just that, for Q1 FY24, things will look up because then you'll get the full benefit of lower input costs. Being a pre-election year, they're working with cement demand for the entire industry to grow by close to around 9%. So those are a few takeaways that came in from Jefferies.
Okay, just want to mention one word on M&M. The company has clocked in its highest ever annual tractor sales of 4.07 lakh units in FY23, and the commentary from the management is also quite good actually for tractor sales. They're saying that an increase in crop output, the mandi price is staying firm, the government support has increased in MSP for major crops, and an increase in wages under the Manrega scheme will help improve the financial security of rural households, and hence tractor sales could pick up further. So perhaps that explains why the stock is up about 0.5%. More on that later. CSB Bank is the other one which is on our radar. Abhishek is here to tell us more on that. Abhishek.
Well, Sonia, it's a strong business momentum that has continued in Q4 like it did in Q3. So deposits are up 21.5% YOY and about 8% sequentially. The CASA momentum has been pretty strong on a sequential basis, growing by 10.7% quarter-on-quarter in absolute value. So as a ratio, CASA ratio has improved by nearly about 53 basis point quarter-on-quarter. Advances growth has been pretty strong, 30.3% YOY and about 11.75% quarter-on-quarter. Calculation does show that there is improvement in the credit deposit ratio by nearly about 275 basis point quarter-on-quarter, which should augur well for net interest margin either remaining strong or improving on a sequential basis. Now, the gold loan portfolio that's grown nicely by about 10.5% quarter-on-quarter, but its share has declined by 53 basis point given the fact that other loans, that is loans apart from gold loan, they have grown by 18.15% YOY and nearly about 13% quarter-on-quarter. So strong business momentum for CSB Bank seen in Q4 FY23. Back to you.
Abhishek, you're watching Karnataka Bank as well?
Well, Prashant, on a negative front, Karnataka Bank has surprised negatively on the loan growth front. Now, it's the industry-wide, there is a strong momentum in loan growth for the banking sector, YOY and quarter-on-quarter. But for Karnataka Bank, the loan book is down 3.7% quarter-on-quarter. So deposits are up 8.7% YOY and about 3.3% quarter-on-quarter. Their loan growth shows that they have lost market share both YOY and quarter-on-quarter. The CD ratio, credit deposit ratio, that's a sharp decline by more than 500 basis point quarter-on-quarter, which could put the net interest margin under pressure on a sequential basis. CASA is up 8.7% YOY and 6.7% quarter-on-quarter. The CASA ratio has remained stable YOY and improved sequentially, but the loan growth that has not gone down well with the investors. Back to you.
All right, Abhishek, thanks very much for that. That's Banks in Focus. We take a very quick break with news that the market is down. Okay, I think we have Mr. Kirit Parikh now joining us. We were talking about how stocks like MGL and IGL are down 4-5% this morning. The market, there was widespread expectation that the Kirit Parikh panel recommendations on gas pricing would be approved and they would go into effect from the 1st of April 2023. Those recommendations have not come up for an approval because the cabinet did not meet last week. Mr. Parikh, it's always a pleasure speaking with you, sir. Thank you very much for your time. Prashant this side. So will are the recommendations still up for approval, sir? What's the latest? Because as I said, the expectation was that they would have been done by now. Go on. Mr. Parikh?
Ignorant as you are. Can you hear me?
Yes, please go on, sir.
Yeah, I'm as ignorant about it as you are because how the government works, I have no idea. I'm not involved in this. And I hope so. I have been told that it will be approved sometime soon. And I do think that should really help the petrol, ONGC and OIL also. But let us see what happens. But I certainly don't know. I've heard from people that yes, the cabinet is considering it. It's likely to be approved. But when it will be is anybody's guess.
It can, even if it is approved at the next meeting, it can come into effect from the 1st of April with retrospective basis, right, Mr. Parikh?
That I don't know. I think personally I'm against doing anything retroactively.
Okay.
Because that really creates a bad feeling and a sense of uncertainty among investors, businessmen, and others.
Sure.
So I think they can do it from fifth. There is no sanctity about doing it always on the first.
Yeah, no, I got that. And I completely take that point. But you are saying that what you've been told is that it was due to come up at the cabinet level for an approval. Would you know, sir, that all the processes leading up to the cabinet considering it had been completed? Had the ministry prepared a cabinet note, sent it up?
Yes, of course. If it goes to the cabinet, ministry must have prepared everything, because you don't waste cabinet's time without full preparation.
Correct. No, I'm saying, has all that been, would you be aware if all that has already happened and at the next meeting it could be taken up?
I'm 100% sure that it's all happened. Otherwise, it would not go to the cabinet. The second thing is that, the committee had representatives from all ministries, and they'd all signed it. So I'm sure that taking the ministry's consensus, etc., should not have been difficult. And now that, of course, there are always issues which economists like us would not fully appreciate the political concerns. So there may be some issues there, but that I'm still hopeful that the government will accept the bulk of our recommendations.
Mr. Parikh, and the heart of the recommendations, what you proposed is broadly threefold, right? One is prices now to be linked to crude prices, right? Not international gas prices.
That's right. Yeah.
Number two is there is a floor and there is a cap, a ceiling.
That's true. Right.
And there is a increase which is built in every year, right?
That is correct. And I should add one more. That
Please.
We have said that by 1st January 2027, everything should be market determined.
Okay. All right. Would you, Mr. Parikh, would you know when is the next cabinet scheduled to meet? Would you be aware?
I have no idea, really.
Okay, but you remain very hopeful, and as you said, perhaps no reason why it should not be accepted.
Yeah.
Right. That's your sense.
I'm quite hopeful that it will be accepted.
All right, Mr. Parikh. Thank you very much. Thank you for taking our call, and thank you for telling us what you know at this point in time.
Yeah.
So for now, while stocks are lower, Mr. Parikh basically telling us that he's hopeful that the cabinet should okay it. I mean, could be the 1st of Feb, could be at the next meeting, could be effective whatever date. There's no real sanctity to the date. Stocks are down because there was expectation that maybe it gets done last week and then goes into effect the new financial year, which has not happened so far. The stocks on your screen, MGL, IGL down 4.5%, 5%, maybe a little bit of recovery. Gujarat Gas is down about 1.5%. We'll take a break. We connect with Prashant Jain, Joint Managing Director and Chief Executive Officer at JSW Energy. The company has completed the acquisition of Maitra Energy's renewable energy portfolio. Later, we'll connect with Hemant Sikka, President, Farm Equipment Sector at Mahindra & Mahindra, to decode their sales for the month of March.